I want to read that to you again slower. Any upside in the box office would benefit AMC disproportionately. Good morning, guys, and happy Monday. CinemaCon is in progress in Las Vegas, Nevada this week, and there are going to be some interesting news articles for us to talk about. We got a hot one right off the press this morning from Deadline. As the box office battles back, is number one circuit AMC about to buckle? Don't bet against Adam Aron, at least not yet. The CinemaCon curtain raiser. The very first article that's talking about what is going on at CinemaCon. So let's dive right into this one. There are a lot of interesting tidbits in this article, and you're going to want to know about them as we go into this week. CinemaCon is the largest trade show for the movie theater industry. And if you read down here, I guess it's about the fourth paragraph, it is targeted towards exhibition, distribution, marketing, publicity, advertising, internet, social media, and of course, theater equipment, concessions, manufacturers, and dealers who will showcase the latest technology, advances, and innovative concession offerings at this trade show. There will also be movie distributors here. Let's dig into the schedule real quick. I want to point out a couple of interesting things that are going to be happening this week, and then we're going to talk about that article. Today, Monday, April 8th, is the first day of CinemaCon, so there are a lot of basic presentations and seminars while everybody is arriving. And this evening culminates with the gala opening night event. Universal Pictures presenting an exclusive screening of The Fall Guy at 6:15 p.m. On Tuesday, April 9th, there are some more seminars, including a morning session, the state of the industry, and a special presentation from Crunchyroll. And the thing that I'm going to be watching for in the late afternoon of Tuesday, April 9th, is the Warner Brothers presentation at 4 p.m. Warner Brothers will be presenting a special presentation of its upcoming slate, and that is sure to drive some industry news. Wednesday, April 10th is even more action-packed with potential news-making headlines. We have a presentation at 8 a.m. from Angel Studios. They have been hot in the last year with some of the films they have been distributing. 9:30 a.m., Lionsgate presenting its upcoming slate. We have at 2:15 p.m., an industry think tank, and that is featuring Adam Aron, chairman and CEO of AMC, Bill Kramer, CEO of the Academy of Motion Picture Arts and Sciences, and Kathleen Taft, president of Distribution, Franchise, and Audience Insights at Walt Disney. At 4 p.m., Universal Pictures doing a special presentation on their upcoming slate. There is an exclusive screening for another film at 8:30 p.m., Babes. I'm not familiar with this one, but I look forward to hearing more about that. Moving on to April 11th, another action-packed day. We have Paramount presenting their upcoming slate at 10 a.m. At 2:30 p.m., Walt Disney is on tap, inviting folks to their 2024 presentation, highlighting their upcoming release schedule. And then they're going to wrap up the evening and the event around 7:30 p.m. when they begin the Big Screen Achievement Awards, brought to you by Coca-Cola. Now, moving into coverage of this article by Deadline, I read through this, and there were a lot of moments where I was like, wow, I didn't know that. And I thought that you guys should be aware of this. I'm going to read some of it to you in case you're driving. Maybe you don't have time to read all of this, and touch on some of the highlights and the aha moments for me. They start off in the article talking about, hey, we told you last year at last year's CinemaCon that the strike was bound to send a monsoon on the business, and indeed it did. We already know that this year started off slow, and you and I have been talking about how impactful that strike was going to be towards 2024, and unfortunately that came true. But they say that the dam is expected to break, with really the pivotal event being the upcoming release here in July of Deadpool and Wolverine. They say here, though, that despite the theatrical business's increasingly robust expectations for late summer and beyond, things have felt a bit touch and go, and there's been much chatter that exhibition is set for a reckoning, that mid-level exhibitors are bound to fold into each other. We don't really hear people talking about that much, do we? That even right now, because of the strikes, that some of these smaller mid-level exhibitors are having some problems. And they're going to talk about that in the next paragraph, but they start out by talking about the big dog, AMC. They say that even that the number one circuit, AMC Entertainment, which is saddled with about $4.8 billion in debt, is bound for bankruptcy. Not so, or not anytime soon, the authors of this article say. To riff off Mark Twain, the reports of AMC's death have been greatly exaggerated. However, now they're going to throw Alamo under the bus. Alamo Drafthouse is apparently, this was news to me, shopping itself out in the market and has been for some months and for a high price, according to Deadline. Alamo being one of those mid-level exhibitors that is feeling the crunch from the drought of movies that have been coming out of Hollywood over the last 6 to 9 months. They go on to say, though, that no major exhibitors like AMC are expected to fold, at least just yet. They say studio bosses were expecting shoes to drop by this point in time, as circuits do not have COVID bailout money to account for any losses from the strikes. What I take from this, because many of us focus on like the three big dogs, right? AMC, Cinemark, and IMAX. There is pain being felt in the entire industry, especially at the mid-level. Deadline goes on to say, from what we hear, there aren't any exhibitors behind in rental payments to major studios. Save unforeseen events, and assuming the release schedule truly revives and the box office cooperates, the industry could emerge on the other side. Again, this is not COVID, which pushed Regal's parent Cineworld into bankruptcy in the fall of 2022. Cineworld having emerged later as a private company, having shed most of its debt in the bankruptcy process, along with a number of theaters. They go on to say AMC itself should have gone belly up more than once. I know a lot of people still say AMC is trying to bankrupt itself. Couldn't be further from the truth, guys. They have been fighting tooth and nail to avoid bankruptcy. It survived COVID intact, thanks in large part to retail investors who piled in, making it a meme stock, second only to GameStop. CEO Adam Aron did a brilliant job cultivating this group, and the company's shares surged in June of 2021 at the height of the frenzy, allowing AMC to sell stock and raise a much needed cash cushion. The price has long since come back to earth at about $3 on Friday's close, which Wall Streeters consider a fair price. The company continued to raise cash last year, however, using some to pay down debt, which is its biggest problem, until earnings rise, I agree, and to maintain the cash cushion amid strikes. A few weeks ago, it said it plans to sell more, $250 million worth of stock. That is that ongoing dilution that we've been talking about here for the past week or so. Many retail shareholders whose stakes get diluted each time more stock is issued remain disgruntled. Oh, we know that. So the honeymoon has been over for a while, though there are still a lot of them holding the stock. Enough that Adam Aron felt he needed to justify his newly reported pay package in a post on Twitter X on Friday, something other entertainment CEOs never do. They then highlight the quote from Adam Aron where he says, "Our draft proxy shows I was awarded AMC stock in 2023, valued using SEC required methodology at $17.9 million. At yesterday's closing share price, it is actually worth $1.345 million. And that is actually a fact. And you can find that exact wording not only in Adam Aron's tweet, but go read the proxy statement. Sorry, I don't recall which page, but I did post it on Twitter on my account and in the community tab of YouTube. This is an exact quote from the company in the compensation package. Adam Aron's compensation package was valued by the company at $25 million, including $17.9 million in RSU and PSU stock bonuses, valued at $25 million in February of 2023. That is the SEC requirement that you value at the current price when the compensation package is created. And at the time, the board said, we want to compensate you with a package worth about $25 million. But Adam has held those shares the entire time through to now. And the current value of that $25 million, at least the 17.9 million of it that was share bonuses, is currently worth $1.3 million, a $16.5 million hit. Moving back to the general talk here in the industry about bankruptcy, Deadline goes on to say, sources generally noted the benefits of bankruptcy to any circuit since it allows them to close underperforming theaters and drop lousy leases. See, that's what you can do in a bankruptcy. The judge can just say, yeah, well, those leases, get rid of them. That debt, just get rid of it. Shareholders, yeah, you're going to get rid of them too. Everybody gets wiped to zero. So we're not really too excited about Chapter 11. And although it's painful to do dilution, it's better than being wiped to zero. That's your other alternative. But let's talk about these lousy leases. AMC picked up a bunch of chains back in 2016, 2017, and there were some leases of underperforming theaters that they picked up while buying up some of their competitors. Distribution insiders say AMC could afford to shed another 100 to 150 theaters, and it would only help their bottom line. Of course, but there's a big cost of bankruptcy. A lot of people get hurt, shareholders are wiped out, and Adam Aron has proved himself able to pull rabbits out of hats. So AMC has closed about 100 theaters since 2019. I've told you guys over and over, they will be closing more as leases come due. These are often long-term leases, and it's not easy just to walk away from them. There's a certain expense, a big expense, if you have to break a lease. And if you're thinking about trying to sell that lease to someone else, well, there's not a lot of buyers for movie theaters right now because of the lack of movies. We have too many screens, too many theaters in the entire industry. So AMC is strategically working to reduce those costs and to reduce the theaters that are unprofitable as quickly as they can. You can expect to see more theaters close, the underperforming ones. That will be continuing to happen. The looming issue, they go on to say, for AMC debt-wise is the $2+ billion that comes due in 2026. We all know about that. We've been talking about that for a while. In fact, we know that debt renegotiation is ongoing right now. The exhibitor will need to renegotiate with lenders, likely push out the maturity of the debt, and it has lenders who have been supportive of the company in the past. There's a lot of people saying AMC is going to go bankrupt because they can't restructure the debt or the debt is looming. I just think that that is people being overly bearish. As they note here in the article, the lenders have been very willing to work with AMC to restructure the debt in previous years. And at this moment, I have no reason to think that that won't happen again. This 2026 debt will get restructured and pushed out and give the company some breathing room until we get into some years like 2025, 2026, where the industry has more movies and the box office is much bigger to a level where AMC can be consistently cash flow positive and annually profitable. Deadline goes on to say the major point worth making on AMC is that they are hyper aware of the debt they have coming due. They need to prepare for that, and they have done an exemplary job renegotiating the terms of a lot of their debt payments, says Alicia Reese of Wedbush Securities. Here is really what I want to focus on in this article, besides the fact that Alamo and maybe some of the other mid-tier companies are struggling. And someone brought this up in one of the comments of one of my recent videos, and it is an excellent point. See, guys, AMC being the big dog is sized to excel when the box office is big. This paragraph leads off saying that any upside in the box office would benefit AMC disproportionately since it has the largest IMAX footprint and much of moviegoing is gravitating to premium formats. I want to read that to you again slower. Any upside in the box office would benefit AMC disproportionately. What does that mean? Once the box office gets big enough where AMC is generating profits every quarter, which by my estimates is a domestic box office over about $10.1 billion, AMC really starts pulling ahead of the competition because every theater is cranking out a profit every single week. And they have way more theaters than the competitors. Like other exhibitors, it's seeing higher concessions revenue and exploring alternative content. It pushed into distribution last year with concert films. Not only that, like other exhibitors, AMC is seeing higher concession revenue and exploring alternative content. So studio bosses might be looking at AMC cockeyed, but Wall Street is more sanguine. AMC can certainly limp along for a while, says Roth MKM analyst Eric Handler, who has a sell rating on the stock. Ratings agencies Moody's and S&P both seem to agree, although they also both called the debt capital structure untenable in the long term. That's why AMC is so dang focused on getting the balance sheet fixed and working on restructuring this debt. AMC reduced the principal balance of its debt by $448 million last year. I know I see on social media every day people saying AMC hasn't paid off any of the debt. That is completely false, guys. Try to pay attention. AMC has reduced the principal balance of its debt by $448 million last year. Free cash flow was negative $149 million for the fourth quarter. After the equity raises last year, the company ended 2023 with $885 million in cash, plus another $250 million worth if it gets it. AMC can pull through to the fourth quarter when strong tentpoles like Joker, Venom, Red 1, Gladiator 2, Moana 2, Sonic the Hedgehog 3, and Mufasa arrive. The recent stock sale announcement spooked the market a bit, but Adam Aron has said on numerous earnings calls that in a volatile industry, it's crucial to be prudent and have cash on hand. I've talked in the past with you guys on social media, Twitter, and here on YouTube about the industry generally being what I call over-screened, too many screens for the amount of people that are going to the movies. And everybody, all of these chains need to cut some theaters to make every single one of them profitable. This next paragraph says, one industry insider insists that the current exhibition infrastructure is designed for a box office of $11 to $12 billion, not the $9 billion high since COVID. That's exactly what we're talking about here. We are overscreened for the current $9 billion box office, meaning the pace of wide releases will really need to ramp up. It's either more movies or less screens. And at some point, you know, in 2025, 2026, we're going to find out where are we at. AMC is going to have a choice to make. If we either got to have more movies or they're going to really need to bite the bullet and dump a bunch of screens. Ratings agency Moody's, in a report on AMC early this year, called North America overscreened, with the current 40 to 45,000 screens probably needing to shrink to 20 to 30,000. That is a huge number that they're calling for, of number of screens that need to be removed from the entire industry in North America, 45,000 to 30,000. But imagine, you know, if you get to that point, how much more profitable every single screen will be. Moody's says the industry will eventually have to shrink to bring supply into equilibrium with movie-going demand. The other alternative is that Hollywood puts out a lot more movies. But you're going to have to address this problem one way or the other. Supply of movies or supply of theaters. Something needs to be fixed. They close the paragraph by noting that since 2019, AMC has reduced its theater count to 904 from 1,000. Most of the industry's reductions will likely occur in smaller metropolitan markets or among mid to lower tier cinema operators as weaker players exit or get acquired by larger operators that consolidate and restructure the industry, much like what AMC did back in 2016, 2017. As leases on theater properties come up for renewal, we expect exhibitors will exit underperforming locations. That's going on with AMC. It's going on with the competitors. It's not going to stop until the industry is right-sized for the box office we are dealing with. Another interesting paragraph here talking about Saudi Arabia, talking about popcorn, chocolate, and Odeon cinemas in UK. Let's dig into this one as we close out this video. They say that AMC's ancillary businesses include branded popcorn sold at retail stores and its own branded candy. It invested in a silver mine a few years ago. AMC continues to get a licensing fee from Saudi Arabia movie theaters. It sold in early 2023. Speaking of Saudi Arabia, I still see people putting out misinformation, and they actually believe this, that AMC lost $1 billion on the Saudi Arabia deal.
You are fake news.
Guys, read the freaking documents. Read the documents from the company. This could not be further from the truth. AMC made money in the Saudi Arabia deal. AMC made a profit in the Saudi Arabia deal. You are fixated on a headline which was misleading, and because it fits your narrative that Adam Aron is an idiot, you didn't bother to actually go read what is in the filings. Let's just take a look at them real quick. On December 30th, 2022, the company entered into an agreement to sell its 10% investment in Saudi Arabia for $112 million. The company recorded a gain on the sale of $15.5 million. They did not lose $1 billion. You misread a headline. Quit saying this nonsense and learn to read the company documents. On top of that, on top of them making a profit, they are collecting licensing fees from Saudi Arabia. But as Deadline goes on to say, these smaller income streams won't really move the needle. The company's debt, like Cineworld's, was swelled by a string of acquisitions. That's had some wondering if an asset sale might be an option to pay down a big chunk of the debt. Maybe Odeon Cinemas in the UK. I've even seen in some of the board meeting minutes in the Allegheny discovery documents that AMC was contemplating, should they throw Odeon Cinemas out, sell it, try and reduce some of their debt. However, as Deadline says, others say there are occasional theater sales, but the prices are very low. No one wants to sell at the bottom. So you guys are always in my comments asking me, why is the CEO not doing something? We need a different CEO. What is a different CEO going to do? He's going to need to fix the balance sheet the same way that Adam Aron and Sean Goodman are, the same direction that the board has given this executive team, fix the balance sheet. A new CEO is going to be given the same mission. The other thing they could do is cut costs, but as this article points out, how are you going to cut costs when the industry is overscreened? Who are you going to sell them to? You're going to sell them at the bottom of the barrel? You're going to sell them for the lowest price possible when no one wants to buy a theater because there's too many of them. Their hands are tied. They're doing the best they can to survive until the industry recovers. And cross fingers, we get there in 2025, 2026. If they don't, AMC is going to have a different set of problems, and they're going to need to really take a hard look at what to do next. They close up the article by saying the hope is that January and February were the slowest months of the year. March popped a bit. April depends on Civil War, which is eyeing a $20 million opening. I am seeing Civil War tonight in IMAX. I'm super excited about that. Yesterday, I saw The First Omen, an excellent religious horror movie. I recommend that one as well. I will let you know my thoughts on Civil War later this evening. But to wrap this up, they say the rest of the tentpole films throughout the year look really strong. The fourth quarter will be much better and sail into a really strong 2025. That is a wrap on this discussion. We went through a lot of talking points. Hopefully you learned something. I certainly did. If you have questions, drop them down in the comments below. I want to hear from you. As always, thank you for watching. I am Tony Denaro, and I will see ya on the next video.